Hello everyone and welcome back to a brand new episode of Monthly Economic Update. During this month, we got the GDP data for the second quarter, which is the April to June quarter, where we saw economic growth as expected, bouncing back very strongly and to double-digit growth levels exceeding 10%. And that was largely driven by base effects because of the previous quarter in 2020 seeing a large contraction as well. But we did see notable increases in sectors like industry and services, with some of the subsectors really propelling growth in the first half. Despite these growth expectations, we've seen forecasters like ADB slightly reducing our full year growth expectation to about 3.4% for this full year. So it's just to see how the second half of growth will pan out, in particular with some of the lockdown measures we've seen, and see how it impacts on the business side as well. We did see during the month of August an improvement in gross official reserves. It went from about 2.8 billion to 3.5 billion by the end of August. And this increase was really driven by the inflow that we saw from the global share allocation of SDRs, special drawing rights increasing during the month, and Sri Lanka gaining from that about close to $800 million US. And there was also a bit of the inflows from the swap arrangement that the central bank has had with the Bangladesh central bank as well. So some of those inflows have improved the reserves in the short term, but it'll be interesting to see in the next few months and building up to the $500 million sovereign bond coming up in January, how that will be sustainably maintained while kind of limiting some of the pressure on the rupee as well. And some of the rupee pressure we're really seeing in terms of the trade deficit expanding. We're really seeing imports also up close to about 2.7 billion in the first 7 months compared to last year, and even higher than what it was in the first 7 months during 2019 as well. And some of those factors really external, fuel prices has been a pressure point as well, and also global commodity prices, which have caused some of our intermediate good prices to also go up. But the rest of it, I think, is reflection of some of our exports doing much better, like apparel and such. Certain textile imports have gone up as well. So that kind of shapes the next, especially the last quarter of this year, in terms of how this trajectory will play out, and in particular whether exports will continue to do better or even do much better than it has in the first 7 to 8 months. On the global side, I think we've just seen two major developments. One is on the oil side. Oil now closing up by the end of September close to about $80 a barrel, and a lot of that pressure coming from certain supply constraints, and also as most of the Western nations head into the winter season, we're seeing a bit more pressure taking place as well. But the other news, I think, has been on the Evergrande, the property developer in China, that company unable to pay some of its key interest payments and the debt repayments as well. That has put the spotlight on the financial sector and the overall real estate, energy, banking sector within China, and how that will cooperate. So I think that's an interesting area that we need to really see whether some of these risks spread into the rest of the global economy, and will there be any impact on global supply chains in particular, given there is reports of energy crisis crunch as well in China as well. So with all those, it'll be interesting to see how the next few months play out, and stay tuned to Economy.lk as we provide these updates in the monthly economic update. Thanks.